Trideep Bhattacharya is with us, Chief Investment Officer, Equities at Edelweiss AMC. Trideep, good to have you with us here. Thanks very much for your time. Banks are doing well. And I reckon one of the most asked around questions on banks is, why is HDFC trading at 15 times multiple? It's a giant, it's growing well, quarterly numbers have been looking good. And so just wanted your thoughts there. HDFC Bank. Valuations now, someone was pointing out, was it almost 15-year lows?
So I think obviously the valuations have to be calibrated against of an enlarged base, what kind of growth they do. And hence different stocks trade at different valuation multiples. Some of the small cap stocks at higher multiples because the earnings growth subsequently is kind of quite high, and likewise. So without getting into specific thoughts, I do agree that broadly speaking, if you look at lending financials, the valuations of that bunch is by and large one place where valuations are still kind of comfortable, i.e. in line with their historical valuations or maybe slightly lower. But I think broadly speaking, you are dealing with a kind of a market which is valuations wise, fair value maybe slightly on 10% on the higher side. I mean, this is a day of conference. I met a whole bunch of companies. It seems to me that the business momentum is fairly robust. So that's where we are.
Hi Trideep, good afternoon. Trideep, just imagine HDFC Bank is not performing, one of the largest weights on the index, and still we are higher. So pretty good news. I think HDFC Bank just needs to move 5% and maybe we'll get back to around the 20,000 odd mark. That's the hope, at least from a bullish perspective. But these large caps, well, it's good. Good portfolios are being built for a longer time horizon. The real party has been in the mid cap and the small cap space. What a big outperformance we've seen in this calendar and this fiscal year. Do you think things are getting overheated right now? If you have to allocate fresh money, where will it go? The larger cap names? Or do you think there are still select mid caps that look good?
No, I think we can't rule out. So overall, the context is that the Indian economy is in a cyclical uptick. And in that context, whenever an economy is in a cyclical uptick, returns get broad-based. And when returns get broad-based, mid and small caps generally tend to do better than the large cap. I mean, if you look at the history of markets over the last 50, 60 years, that's by and large what it happens. Now, in that context, in some pockets are the valuations expressive in mid and small caps. In small caps, maybe in certain aspects, in certain pockets, they are. But I would say that overall, the valuations between mid and small caps, you can still find pockets where they are investable and valuations are still reasonable. Overall, so the classic PEG ratio that we think about, we can still stitch together a portfolio which has a price to earnings growth ratio of 0.9, which means what you're paying for versus what you are getting are kind of are on the attractive side than otherwise.
Okay, Trideep, I did notice that in your flexi cap portfolio, at least the top holdings, if you look at them, they're more large cap than mid caps or small cap. So, is that a sign of maybe a sense of caution with which you're approaching the market right now, given the mid cap rally? Lots and lots of blue chip names in that fund, from banks to names like Infosys, etc. We'll put up the list as well, and fewer mid caps and small caps. So, what's the takeaway?
Yes, I think overall in the flexi cap category, wherever the valuations are relatively better, large caps are clearly at lower valuations today than that of mid and small caps. And some of them have not done as well. So we take a calibrated view between large and mid. I can see in the list that you put together, there is one or two names which are there in the mid cap as well. And if you go below the top 10, there will be more. So I think overall, are we taking a market cap call at the moment? No. I think we are sticking to basically what I call as pockets of earnings resilience. And whether that is a large cap, mid or small cap, those areas of earnings resilience is where we want to be in. Because even if there is a market correction, those areas, my reckoning would be they would hold up better. And if there is a bull market, they would do kind of better in absolute terms. So in either ways, focusing on pockets of earnings resilience is where, I think relative alpha or absolute alpha might turn out to be.
Trideep, simple open-ended question. In the last 1 month, in the month of August, what have you bought?
So I think overall, in the last month or last couple of months, we've by and large seen the result season. We've added to kind of some of the stocks which look good on the medium term but have corrected. So, some of the EMS companies, some of the so-called, hardware-oriented companies which corrected in and around the numbers, we added a bit to that. We added a little bit to the pharma sector, and I would add a little bit on the IT sector. So those would be three if I were to sort of look at nibbling. That's what we have done in the last couple of months, 2 or 3 months, I would say.
And in IT, was it large cap or mid cap? What was the bias?
In pharma, it's been in pharma and EMS stroke, China plus one theme. There it has been more mid and small cap. In IT services, it's mixed. There have been some large caps as well. I think the last result season post a disappointment that came through did give us some levels, particularly in IT services, where stock prices came down to attractive levels and we took advantage of the same.
Trideep, what about these PSUs? Out of nowhere, some of these companies have come out and they're smashing it out of the park. Under ownership could be one reason, valuation comfort, some of them pay a lot of dividend as well. And Prime Minister Modi as well said, just watch these stocks a couple of weeks or so ago. It's come out and just whacked it out of the park. How are you positioned out there?
Selectively, you showed the top 5 names or top 10 names of FlexiCap. You can see one PSU name in there. But overall, the way we pick stocks is kind of, ultimately, particularly, let's say within financials. So basically within PSUs, it's more stock selection, more selective rather than kind of just PSU as a theme. But within that, if you look at lending financials, okay, in my opinion, given that they've gone through the worst asset quality cycle over the last 3 or 4 years and growth is gradually picking up, I would say the growth there is fairly broad-based across private sector banks as well as public sector banks and also NBFCs. So there we have taken selective exposure to PSUs because we think at this stage of the cycle, even the PSUs would stand to do well. The other area where we have taken exposure to PSUs is basically within defense, because we find that as a combination of valuations, their earnings outlook, and where the order book is, that sort of, that places them quite well. So, just to sort of reaffirm, it's more the thematics in and around the sector or the sectoral dynamics that led us to the PSUs rather than buying PSUs and then trying to fit a theme into it, is what I wanted to say.
Okay. Thank you very much, Trideep, for joining in. Need to slip into a very short break. As always, we'll get you a check on what dealing rooms are saying in our next segment, the Street Chatter. We'll also get you a few technical trading calls, BTST, on the other side.